Good morning, everyone. I'm your host, Anne-Marie Band. Welcome to the Daily Edge on the Place Your Trades Network. We are the network that focuses on trading daily options using the CME Group's event contracts to trade indices, energy, metals, and Bitcoin. Today's broadcast is brought to you by Trade which has built a custom app dedicated to trading the CME Group's event contracts. You can trade them on that custom app, or you can use the DOM on the main platform of Trade. And since Place Your Trades is the great place that we are coming from, I do want to take you to the website, show you how it looks, what you can expect when you come in this morning. We've got some young blood. It's going to talk to us about the power of prep. I'm really looking forward to that. When we get to the dashboard in the morning, what we can see are our live streams, and we can look at things like pre-market brought to us by Shy Girl. She gives us really a good outlook that helps us go, okay, what is the rest of the market done in the overnight, and what can we expect during the day? Many of the times I will read this, determine what I suspect the market's going to do from this note, and then position the trades. We've got the daily gap stats from metals up above 50%. This is a really cool tool. What it does is tell us if we open at the particular range above the opening price, what is that probability of staying there and how much we can make. So for metals, everything looks so-so. For energy, also looking so-so in terms of not being able to close above the open. And for indices, we're looking at something super interesting in the ES, I think, as well as the NAS. Both of these are 57% to the upside that says, hey, we could easily close above 44.87. Profit factor 1.38. When I see this, my favorite thing to do is buy the dip. And so that's what I did. The option tools that we see every day for event contracts, and indeed for the equities, the indices themselves, tell us a little bit about where the price action is sitting. So for 44.70, 8 o'clock last night, a lot of folks were thinking no. And now we are looking at those yeses starting to hold as we bottom out. This is my favorite thing to do when I see a gap stat that's up over 57% and close to 1.5. I'll look for the dip, watch it to hold, and then I'll buy it. And that is a great space. You can use this whether you trade event contracts or not. So without further ado, I'd like to introduce you to D3fault Trades. D3fault, how are you today?
Good morning.
Good. Good morning to you. So
Yeah.
Tell me a little bit about, we just figured out that I was done with college before you were born. So tell us how you began trading in the markets.
I guess that would, honestly, if you want to get to like the nuts and bolts of it, it really started back in 2011 when I first got introduced to Bitcoin. And so that was a lot different, trading basically OTC, and it's not anything like it is today. There was no centralized exchanges. So it was really a lot of like backdoor market making, over the counter deals. And that was my first exposure. And as time went on, it led to the rise of centralized exchanges and then leveraged futures, perpetual futures. And eventually I got introduced to the stock market, futures market, and it just kind of took on a life of its own after that.
So tell me, when we look at futures, there are some of us that look at the stock market and we say, oh my gosh, that's terrifying. And there's some of us that look at the market and go, oh my gosh, that's incredibly exciting. And of course, you and I fall in that second camp. But what was it about trading that made you go, okay, I'm going to dig deep? Was it, I'm going to own an island one day? Or was it, oh my gosh, this is my own gig doing my own stuff? Or was it some derivative of both of those?
I think it was the financial freedom aspect of it, of like controlling your own finances. And I always tell people when I'm teaching that, you know, they get frustrated because it's difficult, but also people have to understand it's one of the only professions that I'm aware of that has potentially unlimited upside. So of course it's going to be difficult, but I've always been someone who is very technically inclined. I have a computer programming background, so I also kind of saw it as like a challenge, like a technical challenge to see if I could like beat the market or at least become profitable, which is in most people's case would be considered beating the market. And so yeah, I took it on as like a technical challenge and just became obsessed with it, like to the point where obviously I had growing pains in the beginning, as most people do. You know, they call it your trading tuition. Um,
Yeah.
but once you reach like a inflection point of max pain of potential losses, you get very serious to the point where you identify everything you did wrong, you make corrections, and then you move forward and steadily you get to the point where everything becomes very systematic. And there's like something beautiful to be said about that. And I I like numbers. I'm a numbers person. So obviously I was very um, more so into like technical analysis and um, obviously you can make a lot of money, but I think there's a misnomer in that as well, that you're going to become a millionaire overnight. And that's not the case. You can become a millionaire, but it's really all about consistency, right? You want to have a level head going into this. You want to have a trading plan. And for me, I have it written on my board. I read it every morning. You know, you never get to a point of perfection. It's all about being consistent and maintaining your your risk and following your rules. And I like structure as well. You know, it's very, like I said, it's very systematic.
I like that. You know, there's a lot of wisdom in so much of what you just said. You know, you talked about hitting that max pain event and saying, hey, listen, this is time for the rubber to meet the road, or, you know, I'm going to have to wave goodbye to this opportunity. And so, how would you tell the trader who thinks to themselves, hey, I am going to come in and I'm going to bet big all the time because I see it more as a slot machine rather than an organized mechanical way of going to the market and taking money out of it? How, because you do work with a lot of traders in your Discord
Yes.
environment. So what do you say when somebody has that thought process and you want to guide them to the right place? How do you say, pump the brakes, buddy, you got this wrong?
Um, if you want to gamble, you go to the casino, right? I, I love to gamble. I love blackjack. It's very numbers oriented, but uh, I take a different approach to trading. And if anyone comes at it from that aspect, I just tell them you're going to have a bad time. You're going to lose money. Even if you don't look at it from that perspective, you're going to lose money. Just come in. If you come into the market with the mindset of you're going to lose money, I think you're already a step ahead of everyone. Because most people
Yeah.
think that they're just going to like, for some reason, you're going to be smarter than everyone, right? And you're going to like
Yeah.
make all this money. And that's usually not the case, especially not at first. There's a lot of stuff going on in the market. It is very structured. It's not random noise, but it's not gambling. And that's where people have, like I said, this mindset of social media has kind of skewed people's perception, I think,
Mm-hmm.
in a negative aspect. But in gambling, you're just, I guess there's something you have higher probabilities of winning in, of course, like blackjack. But in trading, if you have your risk management, you find a trading edge and you allocate your capital like commensurately with your portfolio, you have the numbers in your favor. You can skew them into your favor actually, and that's not gambling. That's just being very statistically like and analytical about your profession. So pretty much, if anyone comes to me with that mindset, I kind of turn them away because I'm basically like, you're not ready
Yeah.
until you have that psychological mindset, because that's 90% of trading is psychological. You know, the average person that has some technical aptitude, they can learn the technicals, they can learn the macro and the fundamentals, but not everybody can get control of their psychology. A lot
Yeah.
of people can't.
Yeah. Yeah. What a very thoughtful young person you are. I loved all of those
Not that young,
pieces.
not that young.
Well, I mean, you're younger than a lot of my children.
Oh
so
my gosh.
so but what I like hearing is that you really are looking at trading as the way someone would look at business. And so that's
It is a
just
business.
really, it absolutely is. And when you said, hey, I turned somebody away because it isn't gambling, it's something much more controlled. That's really what this morning is about. It's about how does someone get themselves into a space where when they come into the market, they are in an element of control. Here is what I am looking at. Here's what I've got to prep. And you've got a really big landscape that you prepare for the morning. And as we were talking earlier, you said, hey, that begins the night before. So let's pop up one of your screens and talk through
Sure.
the bell coming in at 4 o'clock p.m. Eastern time. The bell rings, and then here you are. Talk to me about how you prep for the next day and how you build the guardrails around that risk event that you might look for.
So I do, like you said, all of my prep work the night before. I'm not necessarily a morning person, so I like to go ahead and get everything out of the way the previous night. I'm a big fan of, I guess you would call it sector rotation traditionally, but I use what's called the relative rotation graph. And this is just a visual representation of this. And this just is like what a lot of money managers use to see how the different sectors are rotating. Is money rotating in? Is money rotating out? So as you can see, some of the major ETFs are trending positively towards improving as they've been down. So I love to look at this to help me kind of see where the money's moving, because a lot of my mentors, there's a quote that they used to tell me that's really stuck with me. It's to swim with the whales but not get eaten. So you want to just follow the big money, right? You don't want to fight the trend. You don't want to swim upstream. You want to see where the money's going, because that is what moves price. Are people buying or selling? That's all. That's all that matters at the end of the day. It doesn't really matter what your narrative is. If people are buying or selling, that's what's going to move the price. So, and they have so much capital, they can't just pull all their capital out of the market.
Mm-hmm,
They
mm-hmm,
can't.
mm-hmm.
They have to move it. They have to rotate it into other sectors. So as we know, like chips, that's where a lot of the money has been. But as CNBC reported the other day, a lot of these CTAs and money managers from funds are rotating out of semis, and they're kind of going towards more traditional things like utilities, consumer staples. As you can see, they have a very strong trend upwards.
Mm-hmm.
So then I guess after I decide whichever sectors I like the most, I really like materials, I really like healthcare, then I could just go and pull those up individually and then go,
Okay,
because
so
you could just trade the ETF, but I want more gains. That's kind of
yeah.
conservative for me. So I would just pull up the individual ETF. Then you can see all the individual tickers and repeat that same process. Um, and after that, I would go to the options chain. I like to go to unusual whales
Mm-hmm.
per one of my sponsors. Just kind of see, where the money is moving, like specifically. So like expiration, strikes, the amount of premium, that's very important. And then also, is it multi-leg? Is it single leg? Were they sweeps? Were they buying at the bid or the ask? Like all this information is important, and it can be very overwhelming to a lot of people.
Mm-hmm.
And that's just the start of the day. And then it's not even getting into like charting, watching the liquidity maps over on Bookmap. And also I always have my tweet deck up over here where I have all my news alerts, because as you know, there's always breaking news,
Right.
whether it's like important economic news, which I always as well have marked out on my calendar. I have alarms set on
Mm-hmm.
my phone, because uh, there's just some funny quotes about like Jerome Powell really doesn't care much about your trend line or anything like that. So you have to be aware of like,
Yeah.
oh, it's FOMC. That's why the market's so volatile right now, or that's why I should like de-risk going into these events, um, because you don't know what's going to happen. You don't try
Right.
to predict the market. You want to be
Position
reactionary
to
when it comes
follow.
to this.
Yeah.
Yeah.
Yeah. So let me interrupt you for a minute and recap a couple of the things that you said, because they were quite good. You begin at the end of the day looking at the movement of big money. It
Yes.
allows you to position where you can follow money. And so it allows you to also isolate sectors and areas where price action is going to be conducive to the motion that you're looking for. Then you come in and once you've isolated, here's my sector, you look for strength inside of that sector with the stocks moving in those ranges. And then you go and look at the option chains to see where the strikes are most heavily positioned. And then you have an overall flow of chart mechanics from there. So if you're trying to encourage someone that's newer that says, wait a second, my head just exploded for having to do all of that, what what is the most important thread that you can say, hey, this is what I'm following? My suspicion is that answer is going to be very simply, well, I'm following the money.
Yeah.
And so if you are looking at following the money and you've got all of these things, talk to us about the actual chart mechanic that allows you, once you get into the morning and you go, okay, we're looking at this stock and this option strike or this group of strikes. Now what? What about that? All of that planning comes into, all right, now I've got to execute. Talk to me about that execution.
So that would be obviously on a
Maybe
technical
live example.
basis.
Yeah, maybe use a
Do
live
what?
example. Maybe use a live example that you've had today.
Well, today was basically, I mean, I was already in trades overnight, because
Uh-huh.
of the China news that came out.
Yes.
I would say also like Fitch's, this is more news based than anything too, because I do like to trade news. It
Mm-hmm.
was a very big deal talking about Fitch potentially downgrading a lot of the banks.
Yeah, I did see.
So
Yeah.
with news trading, I love it so much because it brings a lot of volatility, which is personally what I want. I want volatility. That's
Mm-hmm.
where there's
Yeah,
profit
that's where you can make
potential.
your money. Yeah, intraday
So
particularly.
the more volatile, the less capital I have to allocate,
Right.
because it's so volatile. I don't need to allocate more capital to get the same amount of gains. So I played short banks right off the open, and I mean, obviously you can have like technical levels, um, which I would advise. I always have um, book map for seeing where liquidity is at,
Mm-hmm.
because that's very important. So as I like
Yes.
to
Liquidity is the name of the game.
I like to squeeze profits like heavily. So I like to be very precise about my entries and exits, almost to the point of being having a disservice to myself because I won't chase after anything if I don't get my entry. And
well, I'm not sure that's a disservice. I think in the end of the day, it's very, very wise.
It is, but it bothers
things can
me.
get away. Things can get away.
I missed the whole NVIDIA run up, which really still bothers me. You know,
but that's all right. They're going to have a nice rundown.
I am waiting for it. I'm not front running it. You know,
we'll see how earnings are.
I'm a little bit biased. I love playing downside because it's really violent and it's fast.
I know.
Take the stairs up, you can take the elevator down. That's the old saying.
Yeah.
So that's a lot of fun. But as you can see, I also like using volume profiles. This is visual range volume profile. So it changes with what's on your chart instead of just like a session profile. So I took profits around here because there's significant support here, but most likely it was going to keep moving down, but I'm not greedy and we had this interview. So I didn't want to be like sweating my position while we're talking.
Get it.
So that's another thing, like I said, is don't be greedy. Greed will destroy you in this game.
Shred you.
It's all about it's all about locking your profits because it's just unrealized gains until you lock it in. And
exactly.
You know, it's not even really yours until you actually lock it in. It's it's still the market's money.
Yeah, exactly.
So,
and it's never the house's money. I hear people say that all the time. I'm trading with house money. Well, see, you actually worked for that in the first place, so you probably don't want to think about it like that, or you're going to play it like it's not real money. So
yeah, that's like actually another thing I definitely want to talk about because I still see so many people doing this and it bothers me. People playing earnings. Like, oh, I'm going to take the earnings lotto. I'm like, do you know how terrible the statistics are if you winning you're buying right before close, the implied move, the implied volatility, your theta. I mean, it's literally worse than a 50-50. You might as well just go to the casino.
Except if you're a gal like me and you've worked
on
a double butterfly.
Look, don't worry. I'll show you. I'll show you.
No.
I'll show you something.
I got to tell you. No, wait. I use a double butterfly. I use a double butterfly formation and I use the spreads. And we have got about, and I'd say this earnings season, we've got about an 85% hit rate. And it's simply because I know which one's to trade, and I've been doing those butterflies a very, very long time.
I will show you something that will make you stop doing that. And because we have a better, this is better. It's 100 times better, I'm telling you. And I didn't invent it. I don't even think the person who taught me invented it. I think it's been around for a long time. They just referred to something else. It's called the IV flush. So it open, instead of playing the earnings, I just wait until open. And then usually
that's what the butterfly does. The butterfly does.
But I don't have to be in position like overnight. I don't have to worry about anything. At open, as soon as the contracts settle, I'm in. And it's usually going to rip back the opposite way and fill part of the gap. Not always, but sometimes. I've had tons of days where we had, like on CCO, we made 800% in like 5 minutes, and only threw a couple $100 in it.
Yeah, now it's those crazy. Things right afterwards. Those really do a lot of
because people like buy the dip or they sell off after the gains.
Absolutely.
And the implied volatility, even if the price doesn't move a substantial amount. The contracts, if you get in on them when the IV is low, right at open, the IV will go crazy. So you're just getting a juice, you're getting a pump off of the implied volatility. So there's sometimes like 10-second trades, 5-minute trades, but I personally love that, and I teach everyone that, and it's a lot better than playing earnings, in my opinion. You know, if it works for you, it works for you. That's what I tell everyone. I don't say my way is better than any way. I just say if it works for you, it works for you. But I mean,
you did tell me I'd stop.
I normally don't, but I will say I don't think your double butterfly is getting like 8 to 10 baggers in 5 minutes. So, I mean,
Oh, that's true.
statistically,
That's true.
but if it works for
Except,
you and you're comfortable with
yeah,
your trading strategy, that's what's
yeah,
important.
yeah. So, all right. So after that little, after that minor debate here, I am
I
going
love it.
to take the, um, oh, uh, Swing Pony says you also have an interesting FOMC strategy. Why don't you tell us about that?
I do.
Yeah.
So I don't like to call it what it traditionally is called because it confuses people.
Okay.
It's referred to as the London Open breakout strategy. So I guess the people who first started using this traded London Open. I've
Mm-hmm.
taken that and just applied it to any event of expected volatility. You could use it for CPI, which I have, and I've hit the last 11 CPIs on
All right.
11/11.
Let's talk about
But
it.
it's basically it's very simple. It's I before I used to do it overnight, but now since I don't sleep that much, I just wait till like 30 minutes before the event, and I do this on futures because you can do this in pre-market on futures, and I put
Uh-huh.
resting limit orders on either side of price, and depending on what the expected volatility is, determines
Right.
how far and how many points away I will put it from current price. So whether it's 10, 15, 20, because I only want one
So
of
do
those
you
orders
use
to
this,
trigger.
do you use the straddle of the at the money to estimate the vol? How do you estimate the
Uh, I also like take into account obviously like certain very key levels on the chart of where I think it's going to
okay.
hit massive overhead or support. And it's kind of like it's hard to explain, but I just have like an eye for like over time, just like back testing and testing this out. And it's honestly what got me so bullish on trading futures because I
I
loved
love
it.
trading the futures.
It
Oh
was
my
to the
God, it's
point where
fantastic.
I started taking some days off because I would already have made like $800,000 like in a couple minutes in pre-market off of not even having to be in a position. That was so foreign to me coming from trading options, right? So like
Right.
you just have those two resting limit orders, and then if you've done this correctly, only one of them is going to trigger,
Right.
and
Exactly.
it's gonna go crazy whether it's upside or downside, and you can set
Do you
your
have them at the
TP.
bid or the ask? You have them at the you have them at the bid. You
Oh,
have the one at the
these are
top at the ask or at the
these are
bottom at the
just like
bid?
market orders. These are
Oh,
market orders.
gotcha.
I just want to
Okay.
get in. I just want to get
Okay.
in. I don't care what I
Okay.
get filled at.
So it's if
Um,
touched.
yeah, exactly.
Okay. Okay.
And
Market if touched.
yeah, so then if I'm gonna do this and like sleep in or whatever, I will set stop losses and take profits, but you have
Okay.
to be careful because you can get wicked out really fast.
Yeah,
But normally
absolutely.
I'm just sitting there with my finger on a hotkey or on an active trader button, just
I
ready to
like
just
it.
like get out.
All
And it
right.
works really good. And so I teach that to people because it's a form of gambling as well, going into CPI, PPI, all this stuff
Yeah.
pre-market with
Yeah.
straddles. Because I used to do that too, but it's also
Yeah.
very risky. Especially
Yeah.
like
And
I
they're
used to do
very,
this.
very expensive.
It is because the
Yeah.
premiums just spike. Like going into FOMC, I used to do that on
Yeah.
SPX, which was just so crazy.
Mhm.
And you just hope you're cutting the right side and
Yeah.
you're not taking a double loss,
Tough.
you know.
Yeah. Tough,
But
tough.
yeah, I'm surprised that she remembered that.
Yeah. So, tell me, what I want to do is first go back to the platform and show, I'll go back to my platform and talk a little bit about some of those same mechanics that we look at, areas of support, looking at a volume profile from the side. We've been talking a lot about how volume matters. And one of the things that D3fault said that really is very, very true that we've been talking about for weeks and weeks is that liquidity is the name of the game. And so when this morning began to track and we had the flush down, it was a great place to look for price action to begin to build, which it did. And so something as simple as go to the last place you saw support, and if it lifts off that edge, you can take the long. And if you're buying an event contract, that means you can buy the yeses at, 44.60, which at the time that it was way down there, it was $9.25, which is where it is that I bought it. And this one is going to have a very nice $20 cover as it moves up and over this edge. But the simple thing to take away, one of the things that Justin, and I'll bring Justin back to talk a little bit more about what it is he does with his folks and where you can find him. The simple thing to look at is, where have I been? And if I move away in the same fashion that I did before, I have a stop that's pretty much built into that framework. And then watching that motion pull forward is going to give you the opportunity to buy into and up as it moves into the resistance of the day. So that's just very simple for me. And my style is very, very simple in general. Justin, a lot of folks come and listen to you. A lot of folks participate in your Discord room. Tell us where we can find you.
Find me on Twitter first and foremost. I really not on any other platforms like consistently. I pretty much just live on Twitter. So
you have your Discord room. So if someone wanted to come in and learn about
inflection point where you could find me is, so you can find me on Twitter at twitter.com/D3fault, and spelled D3F4ULT. So that's my Twitter, and then in my bio I have my website, which is it's Apollo Algo. I've been working on this for the better part of 2 years, and it's been my passion. And now we have access to readily available AI language learning models.
It's
dedicating
really a
lot
fantastic
of time.
site. Yeah, it's really fantastic. I took a look at it a couple of days ago again.
Thank you. I appreciate it.
Yeah,
just spending a lot of time taking a lot of these new models and applying these data sets of market data, and it's not cheap because, as you know, it's very hard to get your hands on graphics cards, and it takes a lot of compute to do a lot of this computation.
Yeah.
But I think it's going to yield incredible results because if you're doing this manually, which is how it all started, I had to look for manual points of inflection in the market. It's a lot of back testing. This can do iterations in the terms of billions and millions of times faster than humans can. So I haven't seen a lot of people really leveraging these technologies for anything other than I don't know, personalized chatbots and all this other stuff.
Do you have a server stack where you are, or is it in the cloud?
Oh no, I have most of the stuff that I'm doing, I'm renting in the cloud, but I am building up my own little server rack. But I'm waiting for George Hotz to come out with a thing called the Tiny Box, which is all-in-one compute AI language learning model server that you just plug into the wall. George Hotz, he just did a Lex Friedman interview. He's
oh, okay. Yeah,
he's a genius. He's a genius. But yeah, I'm waiting for him to come out with that, so I don't have to keep renting from all these server farms, if you can even get in and get allocated, because the demand is
tough.
It's through the roof. It's really through the roof.
It sure is. It sure is. It sure is.
But yeah, it's
fascinating.
My Discord link is on the website at the bottom or the top. Yeah, it's at the bottom. So it's just Apollo Algo on Discord. So you can find me there, and always teaching people. I'm very bullish on the education sector in terms of people need to be educated properly. And there's been a lot of negativity and the education side of FinCwit, and it's kind of scared people away.
Yeah.
So I've kind of like stepped up to the bat and been that guy that's like, I don't know
Yeah.
if y'all are ready, because there's been a lot of
Yeah.
bad actors in the space, but
Yeah.
it's something that people need to be educated on properly.
Yeah, absolutely. I have really enjoyed the time with you. You've presented as such a thoughtful person in the space, and I'm delighted that we had you on the show. We'd love to have you back, talk a little bit more about some of your fun stuff once it starts getting a little bit more heated up on that AI space. I know everybody will be very excited about learning about that. It's been a pleasure. Loved a few of the tips and tricks, and I
appreciate you having me on.
I love the little back and forth on why it is I should never do my double butterflies.
Well, I'll try your strategy and you try my strategy. How about that?
Absolutely. I'm in. I am in. All right. Hey, everybody. Thanks again for coming to the Daily Edge. We've learned a lot from D3fault this morning. He's been super generous with how it is he walks through his individual steps. I've really enjoyed it. Hope you've been able to take away some of the great tips that he's had for us. And I look forward to seeing you next week on the Place Your Trades Network. Take care. See you later.
Bye, guys.